Welcome. I'm Ira Epstein, and we're here to talk about the non-farm payroll, the impact of it, what it might mean for the November, yes, the November Fed meeting, and what it means for the economy. A little bit of everything, I think, because the interesting thing was this report was a surprise. 154,000 jobs. Now, they were looking for 143,000. 154 is dramatically higher to start with. Number two, when we take a look at what the market did on the expectation for the unemployment, instead of it holding, and we've been worried, is it going to go to 4.3 or 4.4? It drops down with this to 4.1%. The non-farm part of it, where do the jobs come from? Well, as you can see in August, they revised numbers. They went up 17. Now, think back to July. They had a revision then. So between those 2 months, it's 70,000 plus that they found in additional jobs. The unemployment rate was left unchanged in August. Now remember, this is against the one we just had in September. And then we look at where the private sector jobs were. They exploded up 105,000 jobs. So it's basically all there when you take a look, and you see the government only added 7,000. The participation rate stayed at 62.7. The average hourly earnings, they're up 13%. But you know, we keep hearing over and over on from the government and from analysts, well, pay isn't keeping up with inflation. I don't know. Inflation is not rising. It's been dropping. So we'll see what happens. And yes, I know that if you look at energy prices, they're going to go up. But the government strips that out and they look at core. And while the Mideast situation has driven energy prices up, and you'll see gasoline going up at the wrong time for the upcoming election for Ms. Harris, she can take this report and say to herself, you know something? We've done our job. On the other hand, the moment she opens her mouth up with that, then we can look at the border and other things where she didn't do her job. And why is inflation? Why did it go up to the big numbers? So I don't want to get into the politics of it. I want to stay where we're at. Average hourly earnings up 0.37%. They were looking for up 0.3%, so that's a gain. Average hourly earnings year over year up 3.9. That's a tenth better, higher. Then we look at hours of hourly earnings rose from a year ago by the most in 4 months. Now that's pretty important, because wage growth for production and supervisory employees actually cooled. So it's the employees that really got. I'm talking the everyday guy on the job. He's the one that put in the hiring. And it's the leisure, the hospitality, as you can see, the healthcare, the government. This all came in. And the so-called underemployment rate, this is very important, which includes working part-time for economic reasons and discouraged people. Well, that fell. So that means people are obviously either dropping out of the workforce or they're finding what they wanted to find. Remember, we saw the JOLTS report. It went up by 300,000 jobs. We saw ADP. That went up. So we still have a pretty strong labor market. Now, here's some graphics to show what this did. And as you can see, the arrow going across shows that you've been actually coming back up. Hiring is topping the estimates, not in trouble. But what are we hiring from? As I just showed, it's the areas of leisure, hospitality, the care that you have to give. Drop all the way down and you can see manufacturing. That's why so often in my daily reports, I'm pointing out often that manufacturing numbers out of different Fed regions are not picking up. Hourly earnings, if you're crying about not making it on the hourly earnings, I don't know what you're crying about, because they're back up. They're not at the highest they've been, but they're knocking on that door. Now we got a couple of issues for October coming at you, and let's talk about those, because I think they're going to show a weaker report then. First of all, the longshoreman strike ended on the evening of October 3rd, but it was for October going, October 1st, 2nd, and 3rd. So that is going to put people on the roll. Can't magically say that they weren't employed. How many of them filed in that? I don't know, all right? We'll find out. Was it enough to get some of the truckers and other people that service the ports to file unemployment right away? Again, I don't know, but there'll be probably some that ran to do it, so I would assume that. What you know is going to happen is the Boeing workers are now going to be counted in that. But there's a monster out there bigger than that. But while we're on Boeing, and I'll come back to the monster, what about all the companies that service Boeing for parts, truckers that have to move those parts around? Are those companies still just producing, or do they produce as they go? In other words, is the chain of what is needed? Nobody wants to stock items, as you know, that costs money. You make as you go and you move it through. Well, if that's happening in the supply chain, then a lot of workers there may have been let off as well. That is something you have to count. But the monster in the room is this Hurricane Helene. The word is that it's as bad in many areas, if not worse, than Katrina. The cost, I woke up this morning and I'm hearing that FEMA is running out of money already, and we're not through with the hurricane season. So now the big question for Congress is, do they call the members back in to give FEMA more money? Most members are out there, a lot of them that are up for election. They are on the road trying to get their votes, make sure. I don't know. But what I can tell you is these people that are out of work aren't like on strike. What do you do when you don't have a road? You don't have power. The factory you worked was totally destroyed. Your local job in your area, some cities like upper parts in Asheville, you know, the beautiful parts of the city are still there, but there's no people to get there. So all the restaurants are shut down. Everything else that would service the community. What about the money lost at this time of the year? Big seasons. I'm just talking that Carolina. What about Florida, Tennessee, Georgia, the Virginias? I mean, whoa, you got an awful lot coming out through here, so you got to take that into account. So in summation, as I'm looking at it, the soft landing, I mean, it really looks good. You get a soft landing in an economy when interest rates have been restrictive, the economy slows down naturally, but if labor can stay relatively strong, then people have money and they cushion that landing. The Fed doesn't have to, in my opinion, go with big cuts for November. Why should they go 50 basis points? They can go 25, whatever. Data dependency for this means the Fed has to look at the CPI number that's coming out right around the corner, October 10th. Then we get on the 11th, they're going to get the PPI, and right after that, the PCE at the 31st. When's the next Fed meeting? Okay, let's take a look. That is November 7th. So I happen to think the 50 basis points is off the table. The bigger question is it 25 or none? And that's what we're about to find out. And I think it's too soon to make that decision. You need to at least get CPI and PPI under your belt before you make any decisions there. You're not going to get another jobs report into the Fed's hand, as I see it, before then, or not, will you? Well, do you think you're going to get a November report? You are. So with that November report, the Fed's going to have all this data and one more chance to look at another jobs report, see if this all came off, and from there, the Fed can make its decision. If you'd like to keep up with what I'm doing here, every morning for my subscribers, I put out 2 videos, one on the futures market, the next one on the stocks ETF spider market. And I go through 40 charts, different charts in each one, obviously, talking what do I see, where is it, but I also discuss the morning fundamentals and go through that. Then in my twice daily written updates, I cover this just the way you see me doing it, with a lot more detail every day, Monday, Tuesday, Wednesday, Thursday, Friday, and then again Sunday night. So you get an awful lot of data. How you can get to this is just go what you're seeing here. Click on research, take a look at the different programs that we have available for you, and take it from there. This is all available at IraEpstein.com. Thanks for watching, and I'll see you next week with another one of these reports.